Christ's sake. Don't look like Joe Granville. You've got one of the biggest noses in the world.
Biggest what?
Nose.
Oh, sure.
An incredible nose, isn't it?
Darn right.
It's about 3 inches from the base to the front, and about 5 inches from there to the top. It's a bigger nose than Bob Hope. I'm just trying to get... Good morning. Joe Granville is a name to be feared and loved, hated and admired. He's the guy who in 1981, he's a technical stock market analyst, says he doesn't invest in the market. In January 6, 81, just before he came on this program the last time, he said to the North American stock market, sell. And the Dow went down 23 points. A couple of months later in April, he said buy, and the Dow went up 31 points. Now, he's sometimes right and he's sometimes wrong. He hasn't done that well lately, but he's bringing you today new forebodings of gloom and doom and a warning perhaps of a total collapse. But he may be controversial, but he's certainly not boring. This is Joe Granville. Now, locally this morning, we're going to take a quiet little look at a new problem on our benighted Granville Mall, which since the very day of its inception has been a pain in the neck. The pain now is the fact that the mall is filling up with people who are wanted in other parts of Canada, but there are no returnable warrants to send them away, and we, with Expo coming up, are left with all kinds of people who should not be on the Granville Mall. And then for light relief towards the end of the program, we're going to bring you, by popular request, the Trial Lawyers Association of British Columbia, whose man, Bob Mackay, is going to tell you that all these incredible liability insurance increases are not caused by judges casually handling out excessive awards, but by mismanagement and greed. I often thought that on the part of the insurance companies. But first, get out your portfolio, flinch and be nervous, and listen to the incredible Joe Granville after the break. Joe Granville is a technical and analyst of the stock market. Joe Granville predicts what's going to happen, and between 1974 and 1981, he claims he was never wrong. He certainly was right a number of times. And in 81, when he was on this program, his predictions were still right. He said sell in January 81 and the market went down. He said buy in April and market went up. But you haven't done so well since then, have you, Joe Granville?
I missed the 82 bottom. People will always remember that. But the past isn't going to make any money now. We have to be alert to what the markets are telling us now, what the future holds. And I would say we've come pretty much full circle from my last visit here in February 1981. At that time, we were facing a recession in North American markets. I would have to make the identical statement today. We have the same background. We have this collapse in the price of oil, which is dominating the thinking in all markets. And I, for one, do not see the collapse in oil as being bullish for our markets. It exacerbates an already tenuous situation in the banking system. And I think that what we have now is a temporary euphoria in our markets, very typical of a major top. And I think when the smoke clears, you will begin to see severe dislocations from this rapid collapse in oil.
Well, let's just take one quick look at the Canadian dollar. It's 69.44, 69.11, I think, in London this morning. Are you involved in that, concerned with that, and can you tell us what's going to happen in your view if there's a downturn continual in the market to the Canadian dollar?
Of course I'm concerned with that, and because it's just one of the many, many parallels with the late 1920s, when there were virtual collapses in foreign currencies around the world. America was papering over the loans at that time, dealing with a number of nations who were in default or near default status and could not pay the interest on their loans unless America loaned them the money to do that. And I see the break in the Canadian dollar is simply part and parcel of the identical trend. And I think in time, we're going to end up with a moratorium on all debt, as was proclaimed by President Hoover in 1930, after going into the Great Depression.
A moratorium on all debt. We'll get back to the dollar in a minute. By a moratorium on all debt, are you talking about these fearsome loans that we're supposed to be nervous about by the Canadian banks and the international banking system to Mexico and places such as?
That is absolutely correct. These nations are not able to even pay the interest on their loans, and I'm talking about now the American economy. We've gotten to the point where we're sinking into the same morass of debt. We're sinking into the same quicksand, and therefore, to complete the parallel, this will end up with a moratorium. In other words, it's like a game of Monopoly. Nobody can pay off their debts, so we're going to clear the whole board and start the game over again.
Would that be bad?
It would be
disastrous.
It would be good long term. It would be disastrous short term.
But who's going to do this? The American government, the British government, the other international bankers?
In my book, The Warning, I describe at least 35 potential triggers that could trigger a near-term disaster in our financial markets. And certainly one of the major triggers is the price of oil. And I, for one, as I said before, I see that the short-term dislocations are bigger negatives and overshadow the longer-term positives.
Well, let me be a little bit of an advocate at the moment. If oil goes down to below $20 Canadian, it's what, 16 American in North Sea oil today, is that not good for the economy in many ways? Does that not lower your cost of production, bring down gas prices?
Yes, those are the longer-term positives, but the short-term negatives exacerbates the worsening condition of the banks. Right now, the banking stocks in America are getting clobbered because of the worry over their ability to stay afloat.
Well, let's be specific. The Canadian dollar, 69.44. If these signs still appear in the market, what will the Canadian dollar go down to, if you care?
That depends on the policy of your government. And therefore, I think history shows that governments usually act in a case of too little and too late. Traditional economics, I would say your government would be forced to jack up the interest rates, your bank rate.
Back to inflation.
Well, certainly to stem the decline in the Canadian dollar would require a further hike in the bank rate. And I think that's coming, and that also is a dislocating factor. The same thing's going to happen with the break in oil is going to force the London bank rate to go up again.
What about the American bank rate? Will that go up too?
Well, what happened back in 1929, you had the same order of events. You had a scandal over in the London market. It forced up the bank rate. That created an unfavorable relationship between the dollar and the London market. It drove money out of New York, and that exacerbated the downturn in our stock markets. I think the same thing's going to happen.
Now, in February 81,
higher rates.
Let's talk about gold now. Gold was way down, and you missed the bottom in gold, didn't you?
The exact bottom in gold was last February, about a year ago, okay? It was in what we call a basing period. Now, some of your more speculative golds that trade here on the Vancouver Stock Exchange had good runs much sooner than the big golds. We watched the big golds like Dome, Homestake, and so forth in our markets, and these didn't move much until late in the year. I flashed a major buy signal on gold in November, this past November, and caught the entire rise from November to January, which was a very, very
What's
good.
your signal today on gold?
Okay, I would reaccumulate gold here. We had a blow-off in gold about 2 weeks ago, a short-term blow-off, a short-term cessation of the rising cycle. But on this pullback in gold, all the golds on our charts are holding well above their support levels. And therefore, that tells us to reaccumulate them. And I make a good case that we could see $500 gold this year. Now, even some...
Not $1,000 gold, as Harry Brown
$500 gold. Let's not get too greedy here, because technically you can make a case that gold is still in a long-term bear market, a down market, but within the context of a bear market, you could still make a good case that gold could come back up as high as $500 this year.
Don't lose me. Are we coming to a major, massive stock market crash from which nobody can protect themselves? I'm talking about those with money. Those without money, it won't make any difference.
Well,
are we coming to a major stock market crash, and when?
Well, this book says definitely yes, and I wrote that book. And the book came out in October, and I think the timing of it will seem to be extraordinary. No such book was written called The Warning in the late 1920s. That book is based on over 300 exact 1929 parallels that exist right now. You could not have that much evidence by luck or coincidence. You could not have that much smoke without the fire.
Don't you feel miserable sitting here saying that the stock market's going to collapse and create havoc and people jumping out of buildings as they did in 29?
A warning is no good unless it's acted upon in time. Now, if you act upon the advice given in that book, you can soften the blow, the individual financial impact. And that's what the purpose of the book is to help you be relieved of some of these problems before they are upon us.
How to survive, in other words.
Absolutely.
After the break with Joe Granville.
Good morning. Let me tell you about a couple of the things that we're working on for today's new news hour. Mortgages. In the past, you've had to wait weeks after you found your dream home, worrying that the bank would turn your application for a mortgage down. Now they've come up with a new scheme where you can get pre-approval for a mortgage. In other words, the bank checks you out and basically okays you for a mortgage before you find a house. Also, an update on CP Rail's 9-mile tunnel. Join us today at noon.
But it's going to turn very, very shortly for a different reason, for the reason of fear of the banking system.
They can't let the big banks go under, can they?
No, but you see, we're caught between a rock and a hard place. 80% of our economic recovery was financed from abroad. So therefore, as a point of policy, we go right back to that printing press. They're going to pick up their marbles and go home.
Right.
And that's why we're caught between a rock and a hard place.
Because you missed the bull bottom in '82 is another fact that you've lost some of that instant magical clout which could produce self-fulfilling prophecies.
I think that's a blessing in disguise. I'll tell you why. Yes, I've lost credibility, but if this event happens, which I see very close on the horizon now, I see a major crash in not only our markets, but markets all over the world. Because if you look at a stock chart, you'll see that virtually every stock exchange in the world is at all-time record highs. It's very much like the price of gold looked like at $8.75 an ounce in January 1980, just before its collapse. Therefore, I believe that being all in the same boat, if I say the markets are going to crash in New York, they're also going to crash in Canada. In other words, there's
You're
no escape.
negative in gold in this book, and yet 2 minutes ago you sat there and you're positive in gold to $500 for a shot within what you said, 2 years.
Okay, now I would say that we could see $500 gold this year, 1986. I got a buy signal in November 1985 after this book was completed. Obviously, we don't dictate signals. When we see them, we have to read them. So getting a gold buy signal, I see the rationale behind a coming rise in the price of gold. It will not be because of a return to inflationary pressures. It will be because of a constant increasing fear of the banking system. In other words, the drop in the price of oil hurts the banks, and if you get enough banks start going under, people are going to start putting more and more money into gold, distrusting the banks.
We've cleaned out all the small banks, more or less. We had a couple of disastrous bank crashes, CCB and Northland. Our big five back to the government are surely as solid as houses.
Well, things are changing rapidly. On the previous cycles, 56 years ago, no Canadian bank failed. This time, you've had the experience of several Canadian banks have gone under. So, therefore, the situation is, or the same sickness we have in the States in our banking system, to a degree, is also seen in the Canadian banking system.
You didn't tell me how far down you think the Canadian dollar will go from the present 69.44 this morning.
That completely depends on the willingness of your government to raise interest rates to protect the Canadian dollar. Now, I don't know how far they're going to raise it.
Well, we've got a deficit which is twice as big as yours per capita.
That is a sickness that's engulfing the entire financial world. It's called debt. There's too much of it, and you get to a point where any economist will prove to you by a simple formula that debt eventually equals asset liquidation.
But if we take your disaster scenario, and you're giving me a disaster scenario
Absolutely.
now, except for gold to 500 within a year, you say the stock market.
Stock markets.
Get out?
Absolutely, get out. Go back into money market funds, treasury bills. In other words, your most liquid government paper. Regardless of interest rates, you go back into that paper for safety. In other words, the big call now is not for appreciation; it's conservation of assets.
Commodities.
Commodities, that's one of your most specific of the parallels of the late 1920s. Virtually all commodity prices are collapsing. And of course, that's spearheaded now with the collapse in the price of oil. So therefore...
Real estate.
Real estate, absolutely get out of it. When I was here in Vancouver in February 1981, I predicted a 25% drop in real estate values in the next 6 months, and that's precisely what your real estate values dropped in the next 6 months. I see the same thing. We've come full circle.
So Joe Granville says, take your money, put some of it in gold, put some of it in cash or government bills, and hide it underneath your bed.
Well,
you're in a real panic.
That's the same trend that happened back in the early 1930s when hundreds of banks started going under. People were willing to hold their money in gold. Gold was legal to hold then. I think the same human nature will dictate the same feeling today, that they'll want to hold some gold when they see more banks go under.
Okay, you say buy gold. Do you mean buy real gold or buy gold certificates?
No, we like the stocks.
Buy the gold. Gold mining stocks?
Gold mining stocks.
Gold mining stocks?
Let me give you an example. Okay. In 1929, the very peak of the speculative boom, Homestake in the United States was selling at $80 a share. If you had bought Homestake on the very day of the peak in 1929, even if you knew the market was going to crash, you wouldn't want to buy any common stock, but you should have, okay? So nothing's 100%. Some stocks will go up in a crash. Homestake was one of them. The gold stocks went straight up.
Look what you do when you say this in what's a sophisticated, civilized continent of North America, where your employment and your housing is all based on confidence. You're going around the country saying, I have no confidence, smash it. Create unemployed, who gives a damn? Cut back social services, that's what you're saying.
No, we are reporters. We have to report the truth as we see it, and if we feel we have enough evidence, if you see a train coming down the track, I cannot in good conscience keep quiet. Right, I've got to tell you, get off the track, I see a train coming down.
Let me say it again. Is it not a fact that the effect of what you say is lack of confidence, lots of jobs, no money for development, everybody hiding the money in gold and platinum underneath the pillow? That is bad, that you will help to create unemployment.
No, because I've lost credibility, and that's my whole point. If I had
what are you doing here if you've lost credibility?
Okay, I've lost a degree of credibility. Now, if I had all my previous credibility, then some of this might be self-fulfilling. But I don't think anyone's going to believe it.
But you think it's going to happen?
Absolutely, because that much evidence could not be wrong. There's too much of it.
Well, Joe.
So I just call attention to people, read the evidence, and like a jury, you be your own jury. There's the evidence, you come up with your own verdict.
Funny note. He's sold out for the Robson Media Center at 7 o'clock tonight, but he's not sold out yet for the 5 o'clock show. You can get him for about $7 American, but it'll cost you $12.50 Canadian, right?
Right.
Your questions to the prophet of doom and gloom, whose credibility is still there, although he admits he's lost some of his credibility, after the break. He's a terrible man, this Joe Granville. Already people are phoning for his number. Put up that number so people can get it, will you? Well, that's this afternoon, that, isn't it? Is this February 5? What day is this?
Today's the 4th.
Oh, it's tomorrow.
It's tomorrow.
It's tomorrow, and just the 5 o'clock one, 669-7123. Okay. You're going to do a walkabout in the floor of the stock exchange today?
I look forward to it.
Might be good fun. Go ahead to Joe Granville.
Yes, I just have a question as far as the stock market is concerned. How would you recognize the market if it has peaked? In other words, it's going to go down.
Well, first of all, and I'm talking the U.S. market now, and the assumption is that where the U.S. market goes, the Canadian market will not be far behind. So therefore, if I talk U.S. market, it should answer most of your questions on that point. Now, in the U.S. market, we have strong evidence that I do not believe the 4-year cycle is going to be repealed. In other words, I would look for an important downtrend that will reach a very important bottom sometime this year. So therefore, it tells us that we're very late in the bull trend. And I would say, with the background of the technical numbers as I see them, that we're in a transition phase right now, going from bull market to bear market. And I think this will be fully out in the open in a matter of weeks. I think,
in other words, in a couple of weeks, you think you'll see the crunch?
In a few weeks, I think we'll see the beginning of a bear market.
Go ahead, please. Go ahead, please.
Good evening. Good morning, gentlemen. I'd like to just ask a question about how stocks were financed before, and now they're financed quite a bit differently. How can you say that the stock exchange is going to act in the same way?
No two cycles are ever exactly the same, and therefore the big differences we have today, of course, we have these monstrous deficits. We have a monstrous trade imbalance. We did not have those things in the late 1920s. However, there are so many similarities that I think the similarities as well as these unique differences sum up as a very critical case of comparison with the late 1920s.
What you're really afraid of are more bank collapses, isn't it?
That is probably one of your most specific of the parallels. Let's look at 5 areas very quickly. Number 1, we're in the 5th year of an agricultural depression in the United States. That's precisely where we were in the late 1920s. We are dealing with the same third world countries who are in a default or near default status as we were in the late 1920s. We have come full circle in the banking system. Our banking system is completely loaned up to the same degree it was loaned up in the late 1920s. There's far too much debt on the international level, on the national level, the state level, the local level, and the individual level. So debt is the culprit, and therefore, to save yourself, you've got to go in the opposite direction. You've got to do everything you can to get out of debt. Do not take on new debts. Do not go into new speculative ventures. In other words, build up as much cash and liquidity for safety, because in the next 6 to 12 months, your buying power will be greatly enhanced on what you can do in picking up assets at 10, 20, 30 cents on the dollar a year from now.
Can I interrupt there? But isn't the banking structure quite a bit different from now, from then?
Okay.
The American banking structure was so not flexible to, wasn't able to pick up the problems. Now it is.
All right.
There was no banking insurance.
Okay.
The banks were dropping left and right. Ours stayed stable.
Let me answer the gentleman. We have the Federal Deposit Insurance Corporation, which of course is supposed to be the lender of last resort as far as guaranteeing deposits. What people do not realize is that the FDIC in the United States today has less than 1 penny behind every dollar on deposit in the American banks. And therefore, the other 99% rests on a gossamer-thin thread of confidence. And it chewed up 1/3 of the FDIC's assets to save the 8th largest bank in the country, the Continental Illinois, in 1984. Now, they are faced with a similar situation today with, let us say, Bank of America. Bank of America has hundreds of branches in California and across the country, and Bank of America right now has the identical stock chart that Continental had a month before its collapse in May 1984. Now, if the FDIC has to save the Bank of America, and they will, it will chew up. They're going into the situation with impaired assets. It's going to take every nickel the FDIC has. Then you might say, well, that's all right. Give the FDIC more money. But what people don't realize is that the American economic recovery was 80% financed from abroad. And therefore, the foreigners who watch their investment, and if they see us go back to the printing press, one move back toward reflation as a policy, they're going to pick up their marbles and go home.
But you've got that congressional bill which insists you balance your budget by some year.
Now, the Graham-Rudman bill, which is now law in the United States, unless it's going to be approved unconstitutional, the Graham-Rudman bill is going to create many, many severe dislocations. We're already beginning to see it in our agricultural situation. And you're going to see it in our defense industries, and it's going to cut right across the core of all American industry.
Go ahead, please.
I've got a thing here from the BC Utilities Commission.
Yeah?
And it says that for every dollar that you pay in domestic use of electricity, 42 cents goes to pay the interest. That I assume would be, the interest on the debt.
Of BC Hydro.
On BC Hydro. So that means that what I was taught in school is contrary to this. I was taught in school that Canadian finance was financed. It was like the BNA Act said that the government had the right to control and issue coinage credit,
That's correct.
etc.
But that's no longer applicable, I don't think. That we lifted the freeze on the interest
Well,
rates
it's-
25 years ago.
It's part and parcel of the entire problem. It comes down to too much debt. And in the United States, within the next year or so, the interest on the federal debt will be the second largest part of our entire budget.
Go ahead, please.
Hello, Jack.
Yes.
Yes, later on this year, the United States is going to recall all the greenback dollars and issue blue ones at the rate of 10 green dollars for one blue one. Can you explain the full impact of this move? I believe it's due to counterfeiting.
All right. First of all, sir, what is the source of your information?
Well, one of the banking magazines.
Okay.
You never heard of it.
In other words, simply because you read that in the magazine, you accept that as gospel truth. Is that correct?
Because of the
It's a
ease
rumor.
of counterfeiting American money today.
Okay. Okay. We have heard the same rumors, but I've never heard of a 10-for-1 switch. I've heard of 1-on-1, and the purpose of this was in the Grace Commission report in the States, that they figured out that we're losing about $160 billion that is escaping legal taxation. And therefore, that started the rumors.
The drug business.
Sure, about changing our currency to flush out that illicit money and make it worthless.
Go ahead, please.
Yes, good morning, gentlemen. I'm curious, you say buy gold, stocks, and paper notes and things like that. I was wondering what you think of the U.S. Treasury notes themselves.
Okay. I would say that if you ever get to a point where the U.S. Treasury notes are no good, nothing's going to be any good. So therefore, I think you can have complete faith and confidence in your short-term government obligations. They will be made good on.
Okay, go ahead from Yellowknife.
Good day. I would like to ask a question about telecommunications stocks such as Intel and the microcomputer and DEC Digital, that nature of firm. And finally, what happens to large outstanding loans that one might have as a business debt to the large four banks?
Well, first of all, in new industries, and of course the entire telecommunication industry as well as the computer industry, all related, all brand new, highly competitive. And what people don't realize is back in the 1920s, we had 133 different auto companies. Now, how many do we have today? The big three. I see the same trend coming in our new computer and telecommunication industry and so forth, that only the strong will survive, and it's an overcrowded field. It becomes overcompetitive, and eventually that ends in price cutting and layoffs and bankruptcy. So therefore, I think you have to be highly selective, and if you're in an investment relationship with those companies, make sure you play the big ones, the very big ones, and be very careful with the small ones.
Next one, Abbotsford. Go ahead, please.
Yes, good morning, Jack. Good morning to your guest, Mr. Granville.
Good morning.
Now, I remember when I was in school and we had different market analysts come in and explain the structure that we had in our borrowing and so on. And we proposed the scenario question, could we have the the large fall in the stock market, such as happened in the late 20s. And he said that the borrowing structure was so much different that it wouldn't possibly be conceivable that we'd have that same type of fall in our stock market.
Okay, let me draw an analogy from your statement. A similar feeling was prevalent in the late 1920s from the head of the New York Stock Exchange on down. And the president of the New York Stock Exchange, he was a man called Simmons. And Simmons, like a Joe Granville, went up and down the country making speeches. And he said over and over, right up to his final speech on September 11th, 1929, about 6 weeks before the greatest crash in history, that we will never, ever have another panic or crash again in the U.S. stock market. And he based that on two things. That number one, we now have the Federal Reserve System, which of course we did. And number two, America, for the first time in our history, had become a creditor nation. Prior to that time, we were a debtor nation. We had limited capital, limited credit. And because of those two facts, we would never have a panic or a crash again.
And he was wrong.
And he was dead wrong. You had a crash 6 weeks later.
Our biggest problem, I would say, that is our large deficit, particularly here in Canada and as well in the United States, seeing how they're our largest borrowing country. Now, if there was a problem with the international currencies, like such as the large debtor countries such as Brazil and Mexico and so on, where would be the hardest hit area because of the large deficit that these countries run?
Well, back in the late 1920s, we had the same situation with the same countries, Mexico, Venezuela, Brazil. All these countries were not able to pay their debts. The United States couldn't even pay off their interest. And we did the same thing we're doing now. We loaned them more money to save the big
This is one of the major signs that you see as the prophecy of
and rising protectionism is another one. Because of the collapse in oil prices, it's going to make the budgetary surplus of the Japanese almost twice as big, and therefore it's going to force a radical shift in favor of protectionist measures in the United States.
Against the Japanese. More after the break with Joe Granville. Yeah, because... You see, Joe, we paid $2.10 or $2.40 Canadian for a gallon of gas, even with the price going down, because we have so much in the way of service taxation on it for all our social services. The price of gas isn't going to come down here. You're much more brutal in the United States, where you can let people starve, right? Without much help from the state.
That's what the record shows. Yeah.
That's what the record. I just wanted to make that point. And by the way, we're not going to change the name of Vancouver back to Granville just to please you.
So be it.
Go ahead, please.
Yeah, good morning, Mr. Granville.
Good morning.
I think actually you should be very careful in telling people to be buying mining stock because at the present time a lot of these biggest mines in Canada are ready to go under. And after you buy them, you'd be stuck with just the paper.
Well, I'm speaking from the pages of history. And when our markets fell apart in the late 1920s, there was a move back into gold mining stocks. And even there you have to be selective. I'm talking about the big, best-known names. And again, not for so much for appreciation, but conservation. And I think that you're going to see the same thing happen here, that when the oil price plunge upsets the banking system and people begin to see more banks go under, there's going to be a more concerted move back into gold for safety.
Go ahead from Kelowna.
Yes, good morning, Mr. Webster. I have a question for Mr. Granville. What is his advice to somebody that has, say, say $3,000 in a savings account in one of the major Canadian banks? He'd be advised to...
Well, we've got $60,000 deposit insurance.
Well, there again, you may head into the same problems, I think, which are coming in the States, that these things are going to be more sorely tested. The guarantee feature of our agency, such as the FDIC, and you have a similar protective agency here in Canada, I think will be very sorely tested in 1986. And there isn't enough money there to back up all those guarantees. The rest of it rests on
You wouldn't tell
confidence.
him to take his $3,000 out and keep it in cash, now would you?
No. I think that amount of money is going to be relatively safe.
Secure.
Sure.
Go ahead, please.
Hi, Yellowknife again. Definitely don't buy CNCP stocks. Anyhow, the question I had, the second one was, what about large loans outstanding with the Canadian banks? How do we fare with that if we had a large amount of money? Should we try to get out of that quickly, or what?
Well, again, I would simply use the word diversified. When a bank is in trouble, they don't hoist a red flag and say, hey, we're in trouble. So therefore, it's simple common sense. Do not put all your eggs in one basket. So therefore, spread your assets around among several areas.
Spread your loans around, too?
Yeah.
That's what he was talking about, loans. Okay, bye. Go ahead, please.
Yes, good morning, gentlemen. How are you this morning?
Good.
Excellent.
Well, I was good before Joe Granville appeared.
Well, sir, this morning I'm here to tell you that I do work for a gold exploration company, and my position with the company is to seek out foreign investors, particularly down in the United States. And what we have been encountering in the past 3 weeks is the Americans jumping like fish at the opportunity to get into Canadian gold investments.
Are you just a speculative stock on the market? You're touting it by the telephone, are you?
Pardon me?
You're selling it on the phone.
Not to that extent, no, sir. What we do is we find out if these people would be interested in learning about it. That's all we do.
Okay, just a minute. Do you advocate speculative mining stocks on the Vancouver Stock Exchange?
There you have to be extremely selective. In fact, flying up here yesterday, I spent most of the afternoon studying the charts on the Vancouver Stock Exchange. And boy, it's like you got to have the right hook and the right bait, because there's a lot of stocks there that look like they're going to disappear off the charts both ways. So you got to be very, very selective and very careful.
Hope you find gold. Go ahead, please.
Yes, good morning, gentlemen.
Morning.
Good morning.
Mr. Granville, I agree with everything you say, with small reservations. The writing is definitely on the wall. Could you just give me a yes or no on whether or not you subscribe to the Elliott wave theory?
That's a difficult question to answer. I'll tell you why. Because I talk to people who claim to be expert in that theory, and I hear every opinion from A to Z. I do not subscribe to the 3,000 in the Dow by the end of this decade at all, because we cannot compare these years to the years of the 1950s and 1960s simply because we're going into disinflation. We have to compare with the years of the late 20s because of especially the background of the debt picture. And therefore, I would say that I do not subscribe to Elliott wave at this point. I think that even if you did, I believe Robert Prechter says you only have about a year or less than a year now to put your financial house in order. So in either case, whether you subscribe to it or not, there's definitely a caveat emptor in all markets at this time.
Go ahead, please.
Jack, if you believe Mr. Granville's influence is harmful, perhaps dangerous, why do you help promote him by having him on your program?
That's a very good question, for which I don't have a specific answer, except that he admits to me that his clout is no longer the clout it was because he lost some credibility because he didn't find the bottom of the bull market in 1982. He was wrong in that, and he feels, I think, a little freer. But I think he's so widely accepted as a phenomenon in the stock market, I would be doing you an injustice if I didn't put him on the air.
Right.
Okay.
Another
question.
Now you have a question.
Mr. Granville wanted to comment.
Yes, I simply want to say, in all good consciousness, if I kept all this information to myself, I could not sleep well at night. In other words, a book like The Warning should have been forthcoming in the late 1920s. It wasn't. All the books in the late 1920s were how to get rich in the stock market. Not one was warning you about these things. And now we see the same parallels, and that requires a book to be called The Warning. That's why I wrote it.
Joe, you make money by what? Selling the Granville Market Letter.
By writing the Granville Market Letter.
How many do you sell?
When do I what?
How many do you sell?
Oh, you mean how many subscribers do I have? 4,000 or 5,000 subscribers.
And they pay what, $500 a year?
$250 a year.
$250 a year.
Yeah.
Has it dropped since you lost some of your credibility?
Oh yes, our peak was in the spring of 1981 when we had about 15,000 subscribers.
So you're now down to 4,000 to 5,000.
We've lost about 2/3 of our following since missing the 1982 bottom. But as I said, historically, that can be a blessing in disguise because when these events transpire, as the warning says they will, they can't blame it on me.
Go ahead from Cranbrook.
Good morning, Mr. Webster and Mr. Granville. A comment and a question. Mr. Granville, it was very interesting that you are selling a newsletter, you are trying to sell a book with your point of view to try and caution people what to do with their money, and yet just a few minutes ago you made a comment to a gentleman that was. Do you believe everything you read?
Do I believe everything I read? Okay, I asked that to the gentleman. That was in reference to the changing of the money, which he read in some banking magazine.
Of course, it was just very interesting, though, that you should that you should make the comment that maybe people should question what they read.
Well, of course they should.
Very definitely they should. And ladies and gentlemen, please go back and read your financial history books. Don't take my word for it. Go back, test the evidence, look at the similarities, and then you tell me if we're not in the same boat today.
Question. If our government or your government really got down to tackling the deficit, would it strengthen our currency and reduce our interest rates?
Long term, yes, but there's no way to get there without a very painful transition period. And that's what I see dead ahead.
Your message today is that gold is a good buy this year up to $500 if you buy the right gold stock.
And the second part of my message to all Canadians viewing me today is to get as liquid as you can. Get out of debt. Put your own financial house in order. Because if you do that, you'll be in a very strong position to pick up assets 6 months, 12 months from now at a fraction of the dollar cost.
So you're a wealthy man, I presume?
I'm a happy man. That's what counts. I don't know why they always equate your happiness with wealth. I am not a wealthy man per se. Like
but what money you have, you keep in government bonds, you keep in cash. You believe in, you would short this market right now, wouldn't you?
Oh, absolutely. And also, wherever possible, invest in yourself. Invest in your own business.
Gold, it's American. I'll do one more short one with Joe. I want a couple of things I've got to do before I go to the Granville Street. Hold on. Take it away. It's not a subject for humor, but I just remember, Joe, about the very wealthy guy with the big Rolls Royce and the chauffeur who hit the stock market crash and said, "James, drive over the cliff. I'm going to commit suicide." You're not that pessimistic, are you?
No. They used to have a similar joke in New York hotels. When somebody came in to register, the clerk would say, "For sleeping purposes or jumping purposes."
The book, how's it going?
Excellent. It's in the 8th printing. It's only been out since October. And that is against the background of good markets. You can imagine what that book's going to do when the markets fall apart.
Are you advising people who, non-professionals, to short sell in the market?
Yes. I prefer...
You really would?
Yes, but I prefer right now to buy put options in way out months. In other words, months like May, June, July, and August. I think you'll get much better leverage on your money than going short.
A short selling for your benefit is where you predict in your own mind that a stock's going to drop from $100 to $1, and you sell it short, and you hope that when the time comes, you can pick up enough stock to cover your commitments at the price you predicted.
If you had that kind of a drop, you pick up a lot more money by buying a way out put option in that stock.
Now, the other thing that and this depresses me, makes us even more like Mexican peons with our peso, is this business. You're big on gambling as one of our saviors.
Absolutely. If you look back at the record, the Flamingo Casino was opened in the depth of the Depression in 1931. We have legal gaming in Las Vegas and Atlantic City in the States. We have a referendum coming up in just a couple of weeks in the state of Louisiana for legal casino gaming in New Orleans.
But we've got governments with a 649 lotto are trying to build Expo, pay for this and that, and the next thing by lotteries.
Sure, you had the Canadian lottery. And
but this is a tax on the poor.
I know, but it's the wave of the future, because when state and national revenues drop, they eventually will opt more and more in favor of making up those losses with forms of gambling, forms of gaming. So therefore, I look for a flourishing of lotteries, casinos, and horse racing and so on.
Houses of ill repute and such like.
Well, it's like the days of the Roman Empire. We're back to the games.
Well, not very cheery output, is it? I'd much rather see inflation and prosperity and real estate prices going up, wouldn't you?
Of course, but I didn't write the script. I read it.
You just read it?
Right. And I don't like it any better than you do.
And you hope you're not creating a self-fulfilling prophecy, I trust.
I don't think that's possible in my case now.
Where's that thing? Put it up again. The full frame. Is it there? Has it been up? There it is there. 669-7123 for tomorrow afternoon at 5 o'clock. My thanks to Joe Granville. Next, we're going to look at Joe Granville's Mall in downtown Vancouver after the break. Granville Mall was a great idea. There are still very good aspects to Granville Mall, but it's had its problems, as you well know. Problems with druggies, problems with punkies, problems with this and that. Now there's a new problem. People on the mall who could and should be returned to other jurisdictions, who can't be sent back because the other jurisdictions are not sending warrants to return these fugitives from whence they came. Mark Schneider looks at the situation.
Ever since city planners had the great idea of transforming Granville streets into a mall, there have been problems. Along with increased pedestrian traffic, a new group of people with nowhere to go, hanging around, annoying shopkeepers, and bringing down the police in ever greater numbers. Lately, the foot patrols have increased, the shakedowns becoming more routine, the dealers more cautious, making nearly everybody a target for a search. The tempo of shakedowns has been dramatically increased in the last few weeks, but it's not having much effect in stopping the dealing in either soft drugs, like these $10 bags of marijuana, or even the harder stuff.
And you're talking about a lot of dollars involved and a lot of frustration. You're talking about these people supporting their lives through theft. It's frustrating for the police as well. They can bust as many as 40, 50 people, and then they get the court slaps a restriction on the person from coming down on the mall, but they get around that quite easily.
He's been on the mall for 12 years now, and he says it's worse than ever. In their latest effort to clean up Granville Mall, police have been moving in unprecedented numbers. Last week alone, police made 44 arrests for various narcotics trafficking charges on the 800 block of Granville. But a lot of those people just arrested will be back here today. Police admit their hands are tied. Although they could come in and arrest many people on outstanding warrants issued back east, in Ontario and Quebec, for example, they can't do it because Ontario and Quebec don't want them back. When Vancouver police want a fugitive picked up anywhere in the country, they stamp the warrant Canada-wide. It means an officer anywhere can arrest the suspect and ship him back to Vancouver. But it is not evenly reciprocal. Ontario issues a great number of warrants that are not returnable. So many so that Ontario accounts for 46% of non-returnable warrants in BC. And the number is increasing by 10% each year. Toronto is the very worst.
Well, it would appear that certain policies established by Crown officers in other provinces for a variety of reasons, perhaps maybe the seriousness of the charge or the cost of returning the individual to that jurisdiction. So we find ourselves pretty well handcuffed in terms of dealing with these people until such times they commit an offense in this jurisdiction for which we can arrest them.
What's your record for with the other stuff?
Well, I trafficked back east when I was young. Yeah.
Drugs?
Yeah, I got caught for that. And once here, about 4 years ago on Granville.
If there's a warrant out for you, they can't send you back though, can they?
I don't think so. It costs too much to send me back there for a little charge like this.
What I wanted to say was this here. What he was talking about, you know, when guys from the east, when guys from the east come out here. See, when cops and police take you in, right? Now they're paying to ship you back, which is $800 on a plane fare, plus they're paying to lock you up. I mean, the government's going to lose twice. I mean, any guy with a half-decent head on his shoulders is going to take the time instead of paying the fine.
Sounds like you know what you're talking about.
A little bit.
Little bit. You must have a warrant for you back east that you're afraid to...
No, not yet.
Not yet?
Not yet.
But you've been sent back or something?
No, never been sent back anyway.
You wouldn't go back though?
No.
You won't go back, will you?
No, not for a while.
Not for a while?
No.
Because they pick you up?
Maybe. I'm clean out here. I just don't keep it that way.
You're clean? I thought you said you just got out of court.
Well, I'll take care of that court date. Don't go to court. No, it's no problem.
What did they get you for?
Well, just drugs? A little charge.
Little drugs?
Just a little charge.
Soft drugs,
serious. Just a little charge. Nothing serious.
Nothing serious. So you're going to beat it?
Probably. I'll just get a fine and pay it and get it over with.
The information I get from the officers on the street, and one who simply has to listen to police radio to hear the number of times that people are checked, warrants are outstanding but non-returnable. And I know this creates a tremendous amount of frustration to officers on the street where they know they have several people in the area that are criminals, have succeeded in a criminal way of life, and we're powerless to touch them until such times as they commit that local offense.
And meanwhile, your police have to sit by, almost handcuffed, and wait until these guys create a new crime.
That's correct.
What can be done about it?
Well, I have taken this matter forward to our own Attorney General, Brian Smith, and he's been receptive to our reports and has attempted through his relationship with other Attorney Generals throughout Canada to bring this matter forward. He hasn't been too successful. Other attorneys in other provinces haven't really seen this as a serious problem, and of course, Vancouver does have the most serious problem.
It's doubtful whether we'll see an early solution to the problem of the non-returnable warrant. For one thing, politicians in most jurisdictions lack the political will to really get heavy. But there's an even simpler reason why they don't want to move. It all costs a lot of money. And with each trip back over $1,000, and with a chance of a conviction not very likely, it's easier to leave them here.
Now, isn't that an astonishing state of affairs? People in Granville Mall who are wanted, but they don't have Canada-wide warrants against them, and we're stuck while Vancouver and British Columbia does the decent thing that when it puts out a warrant for someone who's picked up in Toronto, it's a Canada-wide warrant, indicating that the city of Vancouver or the province of British Columbia will pay the cost of arresting the man and bringing him back to his trial. It would appear that in Toronto, if you don't want to appear, just come to Granville Mall. And then eventually they'll put out a warrant, but it's not a Canada-wide warrant. And if a Vancouver policeman checks a guy on a warrant and finds it's not Canada-wide, there's not a dash thing he can do about it. Oh, I must get Brian Smith on the air. Maybe we should, maybe he should be hammering the Attorney General of Ontario to do his bounden duty and not merely dump people on Granville Mall that they don't want to have the expense of taking back east. My thanks to Mark Schneider. Quite a report. Next we've got the Trial Lawyers Association of British Columbia, and we're going to be talking about this insurance crisis. I haven't done much about it, although there's been much on BC TV NewsHour about it. The one that stuck in my mind most of all was where I think it was Whistler, went from $50,000 to $500,000 for its liability insurance. One tends to accept that too meekly. We're going to interview Bob Mackay after the break. The Trial Lawyers Association of British Columbia has told the Attorney General and others that much misinformation has been presented to the public, municipalities and legislatures by the insurance industry. They're talking, of course, about the crisis in liability insurance affecting these small businesses and cities and towns and manufacturers. And we see this phenomenon of cities and municipalities saying, we're not going to buy any more liability insurance, we're going to set up our own fund. And I, too, had been taken by the impression that this was entirely because of large judgment by judges, even local judges. I'm totally misinformed, I suspect.
Well, Jack, the fact is that local judges and local juries are not giving huge awards, and there's lots of evidence to point to the fact that even in the States, which supposedly has extremely high verdicts in favor of plaintiffs, even there, the rise in insurance prices is not supported by the awards given.
All right, again, not thinking properly, I thought Bhopal, the great gassing in industry, or the 747 that blew up outside off the coast of Ireland, would that not be a reason for the reinsurance companies to say we've got to double, triple, quadruple it, 1,000% liability rates?
No, they're not, Jack. The situation is that where you have an offshore crisis like that, for instance, Bhopal, not a penny has been paid out, nor is likely to be paid out for years to come. The insurance companies would have you believe, if you don't read their material carefully, that in fact they've already paid that, and that's why your insurance premiums have gone up and they've showed a terrible loss. The insurance companies, of course, are in total control of the data they feed out. Nobody looks at their books. Nobody sorts that out except them.
Where's some of this greed actually seen? Your press release says mismanagement and greed on the part of many insurance companies, distortions, half-truths, and even out-and-out lies.
Yes, there are. You've given me several openings there, Jack. I suppose Joe Granville would like to say that if you look at the New York stock market, you'll get a good feeling for the thing. In 1985, the casualty companies' stocks went up 50%, which is something like 3 times the Dow Jones Industrial Average. Wall Street knows what's going on here. Since 1980, the casualty companies' stocks have trebled in value just about.
Well, I was going to put to you the point, though, there were a couple of cases in Canada where I thought that the judges were a little bit too generous, where a couple of kids on trail bikes broke into a municipal dump somewhere. One of them was badly injured, and no negligence appears to ever cause anyone to be refused an insurance claim nowadays. I remember in that one, the judge said, well, the municipality knew that this place was capable of being broken into and ipso facto should have had a watchman inside to protect against kids breaking in, and gave a big award. Am I being brainwashed on that one too?
I'm afraid so, Jack. That's not quite accurate.
That's my version of it, which I picked up somewhere.
Yes, this is an Ontario case, and what eventually transpired was the municipality was tagged with a portion of the liability. I forget what the percentage was. But the reason why the damage award was so high was because the insurance company felt that they had no exposure. And so in their instructions to their lawyer, they said, no, don't bother fighting the damages. So the plaintiff's counsel was able to present figures that showed that the plaintiff would have a $4.5 million cost of future care, and loss of future income was very high, and so on. The result of that was that when they, much to their surprise, got tagged with part of the liability, they ended up with the whole bill, and they hadn't even fought on the question of damages. Therefore, well, they ended up firing some staff from the insurance company.
Now, here you say that many outrageous statements give a totally false picture. Example, the refrigerator and the bodybuilder. What's that one?
Yes, this was a story that I really don't know who started passing it around, but it had to be somebody in the United States in the insurance industry. It has since been touted by the Canadian insurance industry as an example of why our rates go up. And it appeared in Forbes magazine in the United States. From there it was picked up by a columnist in the Los Angeles Times, and that column was reprinted in a Vancouver newspaper. And the story as given out goes like this. There was a bodybuilder who strapped a refrigerator to his back.
What do you mean, a bodybuilder?
Yes.
I thought of an automobile bodybuilder.
No.
A bodybuilder.
A muscle man.
A muscle man.
And he tried to run with this refrigerator on his back. The strap broke, so he sued the manufacturer of the strap and won. Well, of course, that's ridiculous. It strikes you and me as ridiculous. And when we read that in a column, we think, my word, the courts are out of control. Now, courts in Canada, and I even say courts in the United States, judges and juries don't give money away for nothing. The facts were more like this. The fellow was a bodybuilder. In 1976, he was Mr. Olympus. In 1977, he signed a contract to do a TV show. He was one of several contestants in a contest to be called the World's Strongest Man. It was put on by the MCA Corporation in the United States. The people staging the show designed the equipment, or had it designed, to actually allow contestants to strap a refrigerator on their back and run for 40 yards. And there were a whole series of strongmen taking part in this. They guaranteed in writing that the equipment was safe. What happened was they didn't design the equipment with somebody who was 5'6" tall in mind. All the other contestants were over 6 feet, and I guess they did just fine. The 5'6" bodybuilder strapped on the refrigerator and took off. He went about 8 yards, and the refrigerator hit the ground, knocking him down and crushing one knee quite badly. That led to a lawsuit which was settled out of court, and in fact the corporation settled short of the trial verdict, and in fact there was no insurance whatever involved.
None at all?
None at all.
What about the burglar and the skylight?
Well, that's another good one that they like to tell you about, and it enraged me when I read it, and I'm pretty cynical about these things. It said that a burglar and a couple of his friends were breaking into a school, and they accidentally fell through a skylight, injured themselves, sued, and got $1 million. Well, needless to say, the facts are different. What happened is a 19-year-old graduate of a high school, he graduated the year before, and two friends were playing basketball outside at night. It was getting dark. They wanted to find a floodlight. There was a floodlight on the roof of the school, so as a prank they went up to get this floodlight. And of course they shouldn't have been doing that, but I don't think we could really classify them as burglars. Up they went. The plaintiff in the case fell through the skylight, was rendered quadriplegic, brain damage, very sad case, extreme damages. The reason why the school board was ordered to pay was as follows. 6 months before, somebody else had fallen through one of the school skylights, a different school but same school district, and they had, the reason why he fell through is because the skylight was painted the same color as the roof. You couldn't see it. And because that had happened 6 months before, the school board had been ordered to clean up their act and repaint the skylights. They hadn't gotten around to this school, so a jury found that they were indeed liable.
It wasn't just a burglar in the skylights. But why are the trial lawyers concerned? Surely your only concern is that your clients can have access to an insurance company to sue on their behalf.
Yes, well, the trial lawyers are very concerned because we're in a position to know the facts of these cases, and when we see the, I'd almost use the word out-and-out propaganda in the newspapers, there seems to be a concerted effort to get these stories in there and to distort them. When we see those in the newspapers and we couple that with the difficulties municipalities are having getting liability insurance, they of course are panic-stricken. They're not used to being without insurance. Small businesses are being forced to pay exorbitant premiums, and what is happening is that those people are putting tremendous pressure on the government, and the government is also reading all this misinformation. And what we're afraid of is that there will be a move to throw the baby out with the bathwater, not to regulate insurance, but to say, well, there's one way to stop this, and that's to stop the courts giving big awards, which isn't happening in the first place.
Oh, you mean set a limit on awards, which would of course affect the income of the lawyers who are working on a contingency basis to get a client's money for them.
Jack, I'm not a lawyer, so to that extent, I'm not speaking on that question. However, just because the messenger has an interest is no reason to disregard the message.
So you basically say is that they're making money, they're conning us, it's a bunch of double talk, and do you say therefore, does the Trial Lawyers Association say that these massive increases are done without the actuarial justification, but on a basis of sheer get more money from the mugs?
Exactly. Insurance brokers, local brokers who are not involved financially with big insurance companies will tell you that in fact court awards have, even they will say the court awards have little or nothing to do with rising premiums, and what they will say is, and these are insurance people, they will say that insurance premiums should perhaps rise by 50%, 75%, because there are problems in the insurance industry, and I can go into that if you like, but they certainly shouldn't go up 1,000%. That's greed.
That's what they've been going up.
That's correct.
One question before I go to the phones. Has there been any similar exorbitant increase in homeowners' liability policies?
Well, all I can tell you about that is I've read nothing about it, and I've recently renewed mine, and as far as I know, it was the same price I paid last year.
Okay, we'll take questions to Bob Mackay, speaking for the Trial Lawyers Association. We might have a bit of a free-for-all, too, if you don't fill the board instantly, after the break. Are you ready?
Ready.
Go.
Hello.
Hello.
Jack, I'm a risk management consultant in the insurance industry across Canada. And one of the things that I do is help the clients in purchasing insurance. And I can agree that the insurance industry at the moment, the rates are just unconscionable. The experience that I've run through with a number of clients is in fact the liability losses over the last 2 or 3 years have in fact been lower than they were before. And the insurance companies are utilizing the pressure brought by the treaties and the reinsurance companies to increase the premium costs far beyond what they actually need. The Canadian experience has been very good, and even where I have clients who have business in the States, we found that the loss history in the U.S. bears no relationship to what the insurance companies are saying. The history of why this increase came about is really only by rumor, and it was given that about 2 years ago, the large trucking fleets in the United States were being switched around between brokers, and the claims loss history was falsified. The treaties found out, treaty insurers, and one part of the market called the facultative market, who undertakes to look at each individual risk, they have traditionally never lost money. But in this big trucking fiasco, they found that they were millions of dollars out, and the rumor has it that they're something like $4.2 billion out on past claims history.
That's in the trucking industry.
Yeah.
Well,
what's happened is that these treaty insurers have withdrawn from the market and will only take very preferred risks.
Well, now, that doesn't explain the whole worldwide explosion, though, does it?
Well, what happened is that because the treaty insurers have lost money, which is totally strange in the insurance market,
right,
all of the others have panicked. And we're getting rate structures being set up that are totally unconscionable.
Well, what can you do about it, though?
I think the best thing to do is there are certain organizations like RIMS, the Risk and Insurance Managers, who have access to the claims data for most of the major corporations across Canada. If people like that would get together and run a loss history of their own, which would probably account for about 40 to 50% of large business across Canada, and take this to the local superintendents of insurance, showing that their liability claims had not gone up drastically.
The superintendent might step in. Most of them do have the power, don't they?
Yes, they do, and I think this is one of the ways that we can prove to the insurance industry, underwriters at the moment don't know what to do. I've seen rates 1,500% increases, totally unjustified. And we've got to bring some pressure on the insurance companies.
Well, that's good. So therefore, you've got to do some political lobbying in Victoria, too, as well as in Ottawa for the federally chartered companies.
Exactly.
Thank you, sir. Sounded reasonable, didn't it?
Couldn't agree more. In my opinion, and I've gotten to this point simply by reading a lot of stuff recently, Jack, a lot of this crisis, so-called, is due to financial losses by insurers over the very short haul, but that's mainly due to a downturn in interest rates.
Go ahead, please, from Whitehorse.
Yeah. I was going to ask, do you think that the amount of coverage can in some way influence the amount of an award? If somebody's got 10 million, I'm going to try a little harder to get after some of that if they run over my toe.
Oh, yes, I would say so, logically speaking. I forget what the limits are in BC now, but I know I've got a couple of 3 million on my vehicles. Most people have, I think, now, don't they?
Yeah, but I mean municipalities and things. If they only carry $1 million worth of insurance, is somebody going to go after them for 10?
If somebody runs over your toe and you try to convince a judge of the Supreme Court of British Columbia that you should get $1 million, good luck to you. And I'd like to know who your lawyer is.
Yeah, but the more insurance he's carrying, I think the better bites I've got a chance of getting some. The reason is because most lawyers, don't they work on a commission?
A lot of them do in liability cases as high as 40%.
If there's more in the pot, well, then you can get a better lawyer.
I agree with that. Thank you.
If you have a good case.
Well, yeah. Got to say that for a start. Go ahead, please.
Yes, good morning, Mr. Webster.
Morning.
Good morning, Mr. Mackay.
Good morning.
Yes, the question that concerns is the statement that Mr. Mackay made earlier about justification for the 40 to 50% rate increase, like the problems in the insurance industry. That's the first question I have, is I'd like to know what the conditions are. And the second question is about ICBC. It seems to me that the insurance corporation tends to be pretty arbitrary in their decisions when you're going in to see them. And I was wondering if that is causing a lot of people to be forced into the courts to go after, insurance claims or settlements against people they have cases against.
Good question. First of all, why do you say that they may be entitled for a 50 to 75% increase, but not 1,000? Obviously, I know why not 1,000, but why the 50 to 75% increase?
Because over the last 2 or 3 years, people getting liability insurance have received incredible bargains. Insurance companies were making so much money, and there were more and more insurance companies writing liability insurance, as a result of which the competition drove the prices down to an unrealistic level. And even good reputable insurers had to chase those premiums lower and lower to keep their own cash flow going. And when all of a sudden the crunch hit on interest rates, so at that point they start to lose money overall.
You mean on their income investment,
on
which
their
is
investments.
One of the biggest things of all. They get their money in advance and they can bank that and play with it on the market or whatever and make a lot of money on it.
That's right. And if you accept the insurance company argument that last year was a bad year for them, which I don't incidentally, but relatively speaking it was bad, they didn't make as much money as they usually do, then the current hike of, say, 1,000% in insurance premiums is certainly going to turn that around.
Good, thanks very much. Now where's Kamloops? Go ahead from Kamloops.
Yes, in regards to the logging industry, we were all told that our insurance was up as of the end of the year, and we had to find new companies to insure us due to the forest fires. And then we were raised well over 200%, and there was nobody in the Kamloops area that could insure any of the logging contractors, especially the small logging contractor of 5 pieces of equipment or less. And we have all been forced to go to Williams Lake.
To get your insurance there?
Yes, and their insurance there, but in excess of 200% raise.
There are 2 sets of victims in this current insurance company campaign. There is the victim who is going to get run over by a car tomorrow, and as a result of this misinformation, a jury is going to give a smaller amount because they're worried about giving out too much, and even judges feel that pressure, I'm sure. The other victim of the current crunch is the people like yourself who are trying to make a living and whose premiums have gone up 100% plus. All I can say is that there are solutions out there. They usually involve shopping an awful lot harder. They involve taking perhaps a larger deductible. They involve pooling your resources with other people with the same problem, for instance, municipalities getting together and so on. And they involve gritting your teeth, hanging on, because sure as shooting, when those profits start racing in, there'll be more and more people writing insurance.
Thank you. Go ahead, please.
Good morning. I just don't really have a question, just a couple of comments. The first one is that the reinsurance industry doesn't seem to recognize Canada as being a separate market and less litigious, excuse me, than the U.S. market.
That's a valid point on which I may have to stop. Are we being rated in a panic for the whole world?
Offshore insurers, and I include in that American insurance writers, do that because, of course, it enables them to make more money because they charge higher premiums and don't pay out as much when they write insurance for us. Also, keep in mind, many insurance writers that are writing insurance for Canadians are American companies, and they are not going to give us a break at the expense of their own people.
My thanks to Bob Mackay, speaking very well for the Trial Lawyers Association of BC after the break.
Expo 86. 87 days to go.
Tomorrow, Dr. Hilary Wass is going to give us a status report on the situation about AIDS in Vancouver. Hilary Wass tomorrow on Webster at 9 a.m. precisely.
Expo 86. 87 days to go.
Status report on AIDS with Dr. Status report on AIDS with Dr. Hilary Wass at 9 a.m. precisely. What became about the panic over AIDS? I'm interested in following that situation with Dr. Hilary. What happened to the sound vanished and I lost my concentration. I wonder what became about the panic over that dreadful disease, AIDS. I'm going to double check the situation tomorrow with Dr. Hilary Wass at 9 a.m. precisely.